And what we've heard from the chair is that you, at least, when he talked about the recovery being stronger than what had been expected, you still have a bullish thesis because of the massive monetary stimulus. But what about this fact that the chair is calling for Congress for more fiscal stimulus, Dan?
Yeah, good question, Adam, and thanks for having me. It's nice to be with you. So it's nothing new from the chairman. We've seen multiple calls for more fiscal stimulus from Chairman Powell. It looks like both sides in Congress are starting to get a bit closer to a fiscal stimulus deal, but still a ways away in terms of the size and the scope. So we'll certainly see what happens there, but we've been pleased with the strength of the economic rebound and recovery. So we think when the market looks at the situation, they look at the fiscal stimulus package as something that we'll get eventually, whether it's before or after the elections. But we do think that the expectations are that something happens there eventually.
Hey, Dan, it's Julie here. It's good to see you. So as we look at the sort of back and forth on fiscal stimulus, as we look at the coronavirus numbers, as we look at the economic data, which, as you said, has been relatively strong, although certainly the job gains seem to have stalled out to some extent recently, does any of that matter as much on that side of the ledger as monetary stimulus does on the other side? In other words, can the market go down very much while the Fed is still doing what it's doing?
That's a good question. And we've heard in their September meeting that the Fed's going to be extremely accommodative with plans to keep interest rates at or near zero through 2023 and even through full employment. We don't know exactly what the definition of their full employment structure is, but extremely accommodative, and it really does constrain other investment opportunities outside of the equity markets. We're looking at a 10-year Treasury yield at 80 basis points. It's not very difficult to find very high quality dividend paying stocks that pay investors 3 or 4% yields. We haven't seen that type of divergence in a very long time. So they both work together. But on the economic front, we've been really encouraged by what we've seen on the jobs front. We've added back more than 50% of the jobs that we lost in March and April. The housing market is on fire. On the corporate front, earnings results have been really resilient, which has been encouraging. So the two definitely go hand in hand.
Dan, it's Brian Chung here. I want to ask about volatility, not just the VIX, but broadly speaking, do you feel like the volatility has kind of come down? Because it seems like that's what the Fed's mission is here, committing to keeping rates near zero and doing whatever it takes over at least the next 3 years or so. So have they succeeded in reducing market volatility, or do you think that it's just other types of news headlines that have now entered the chat here in terms of keeping everyone on their toes?
Yeah, that's a really good question, Brian. And we've seen, obviously volatility levels have come down from historic highs back in March, but the VIX still trading at around 28. That's significantly higher than long-term historical averages. So we think a lot of that probably has to do with some of the uncertainties that we expect around the November elections. Do we see a contested election cycle where the results are really extended over weeks and months? So we think that's probably a contributor why we've seen such a powerful rally in the equity markets. But the volatility hasn't crept down to below historical averages, and it is still fairly elevated.
Dan, I wanted to ask you about some individual stocks that you like here as well. Bristol Myers is one of them. Of course, the company announcing yesterday was going to buy Myocardia for about $13 billion. And it's interesting because there's been sort of a pile into segments of the pharmaceutical space, but it's been more on the sort of biotech, higher beta names. What's bringing you to Bristol Myers?
Yeah, so we think that Bristol Myers has really just a leading oncology and cardiovascular portfolio. We think that was really strengthened through their merger with Celgene, which closed late last year. And I think valuation is really a key component for us as well. It's one of the cheapest stocks in our portfolio. It trades at 8 times earnings estimates for next year. And given that low valuation, you would tend to think there's some structural issues with the company. Certainly not the case with Bristol Myers. Earnings are expected to grow by about 30% this year and almost 20% next year. Stock also pays investors a really attractive 3% dividend yield. So we just really like that attractive combination of value, growth, and income from the stock.
One of the stocks you also like is Ciena Corp, and they're a little bit more expensive, trading at roughly 13 times earnings. But what is it that you like about this, especially as the world goes 5G?
Yeah, very good question. So Ciena really supplies the platform and the architecture that supports internet traffic and also telecom infrastructure. Some of their clients include the large service providers, the web scalers, and the cloud players. And we do think that they're really well positioned for those long-term connectivity trends, not only the rollout of 5G, but the growing demand for bandwidth growth, network densification, and just the greater connectivity of the data centers around the country and around the world. The stock or the company gave some weak earnings guidance on their last call. It sent the stock down about 35% from those August highs. So it now trades at about a 50% discount to the technology industry. We think this is a company that can grow their earnings at 15 to 20% over the intermediate term. So we've used that weakness to add a position in Ciena Corp.